In the next 2.5 minutes, I'm going to give you my take on why Bitcoin has been crashing for the last couple of weeks, hopefully giving me enough time to try and save these mushrooms that I've been cultivating. Look, they're getting proper dry. All right, let's get into it. Very briefly, let's touch on what money is. It's a conceptual contract between two willing parties to exchange resource over time. So you need something that's going to last over time, that's scarce, that can't be forged, in order to say that that contract exists. A good example of something that does this quite well is gold. One of gold's benefits is also one of its downsides. It's highly constrained, which works well when times are good, but when we get global shocks, the system typically fails. This is why governments move to fiat currency. It introduces flexibility, but at the cost of financial discipline. Now, a lot of the Bitcoin believers will tell you that the economy failing is a good thing because it acts as a signal, a catalyst for change. We should be doing something different. The issue with that argument is Bitcoin is incredibly reliant on the existing fiat currency system. So this leads me on to the first reason why Bitcoin's price has dropped so much. Everyone was buying Bitcoin using fiat currency. Not only that, they were using things like credit and loans. And what happens when the underlying asset loses its value? You have a contractual obligation to pay back that money. So a load of people had to cash in their Bitcoin to pay back the loans that they used to buy the Bitcoin in the first place. All right, so the next thing is stablecoins. Why are people buying those instead of Bitcoin? What are they? They're essentially a layer on top of the current financial system. Similarly to how banknotes and fiat currency was a layer on top of gold, stablecoins are a layer on top of fiat currency. This means that you can peg the value to that currency. So it's like, why would anyone do this? Well, the reason that they would do it is that many of the world is debanked. They don't have a banking system, but they can get a mobile phone and they can get a digital wallet. This allows them to enter into the global financial system using stablecoins instead of something like US dollars. The idea behind this is that it massively increases global trade. Now, there is an argument to say that this is quite inflationary. However, if you increase the amount of trade and supply going on, that might smooth out the inflationary effects, and actually it might all sort of sort itself out. It's either that or the next massive financial crisis. Anyway, the point is, a lot of people who were using Bitcoin to bring on countries that didn't have a banking system are now just using stablecoins instead. They don't have the downside of the high level of volatility, and they do have the upside of being backed by institutions that are more likely to make sure that the technology works into the future. And so the last thing is there's just been a massive shift in the mentality around owning Bitcoin. Part of it, and people might argue this isn't the case, but I think it is the case, is that it was kind of cool. Like people were like, yeah, I've got a bit of Bitcoin. I'm in the Bitcoin market. Anyway, that is my short version for the sake of a video. I've actually written a proper write-up on this. You can have a look at that if you fancy it. If not, I'll see you in the next one. If you like that video, slap that